also the key for growing accounts of all sizes efficiently. Risk reward is the concept of risking a little to make a lot, and is something most traders do. I will break down this trade more in depth after, but first, let me show you risk reward in action. I'm going to use the risk reward tool to show you how this is done. As you can see, the dotted line is where we took our trade entry. The area here in red is what we risked, and the area in green is what we made. Notice how the risk-reward ratio is 17, and what this means is we risked 1 to make 17 times that. Meaning, in this trade, we only risked about $700 to make more than $11,000. Let me explain this in smaller terms. Let's say you risk $50 on this trade, and your risk-reward model is 1 for 17. What this means is if the trade went against you, you would lose $50. But if the trade goes in your favor, you would gain $850, which is 17 times the 50 you risked. You risk a little to make a lot. Now, you are probably thinking, but how did you know that the trade would go that far? And the truth is we didn't. We did not know how far the trade would go down. And no trader knows exactly how far a trade will go. But here's the thing. I'm going to show you a key technique on how to lock in gains, but to also have the trade open in case the trade moves further. So I'm going to use this white line to represent our stop loss. So from looking at the higher time frames, we spotted an entry through a break of this trend line, break of the 50 EMA, and we have these candles rejecting it, which allows us to put a tight stop loss in. And we put it above these wicks here. Once price starts moving in our favor, we notice this minor level here. And we moved our stop loss into profit, but behind this level, just in case it pulls back, and we are protected behind this level. Price continues to move down, so again, we notice this level here. We then again move our stop loss into profit more, but behind this level for protection. Price then tanks down, and we don't start seeing buying pressure happening until right about here. As you can see, the swings start happening. So again, we move our stop loss down right above these swing highs, because if it ends up breaking upwards, it might signal a reversal. Price then proceeds to move down again before starting to swing. We then move our stop loss above the highest point. Remember to not move the stop loss too close to let the trade breathe. Price then makes another move down, and we moved our stop loss to where it currently is. We also have it a little bit tighter because of how extended and oversold the daily time frame is. Now, moving forward, if this trade tanks down further, we'll then move our stop loss above the swing high here of the candle, locking in more profits. So locking in profits means that this trade has zero risk. If it turns around and takes out our stop loss while we are asleep or away from the screen, that's not a problem. We've had this trade open for a few weeks now, and we just check on it every so often to manage the position. Now, evidently you will need the skill to find good trade entries, but finding good trade entries is only half the battle. How you manage the trade after the fact is just as important. So I'll give you a quick run through of how we entered this trade.